Excuse me. Welcome, folks. Welcome to Thursday Night Stock Charts Live. Another Thursday. It goes like that. Welcome. We're going to go over tonight, obviously, the earnings reports out of Amazon and Apple. We're not going to focus all too much on the numbers per se. The talking heads on CNBC, I'm sure, are doing a good job of that. We'll talk about our positioning. We'll talk about how we closed out the month and the week, or about to close out the week, but definitely how we closed out the month. And threats to the market. And also, how expensive is this market? And we're going to use two metrics. So if I could ask you, please smash that like button. Oh, a bunch of you already did. Thank you. Thank you for that. Oliver, welcome. Franklin, good evening to you. Let's see what the new month will bring. Love the attitude. Jedi, on board from Louisville. No fans. Churchill Downs Racing starts on May the 13th. No fans or media allowed. Bam. Eric, I got your email. The texts are down, being fixed, but you should have received an email. I'll check the... I didn't do any today. I sent one out yesterday, or we sent one out yesterday. TA, I responded to your email. Hello. RL, hello, good evening. Let's get to it. Denny, hey. Hey, Denny. Let's do this. Let's go to the after hours activity. We'll let people populate in here. All right, so Apple came out, reported earnings, and initially they rallied. And frankly, I didn't believe the numbers. I was in shock. iPhone shipments did come down a bit. Their China business was hurt. Their production was down. No shock there. I don't think that they're coming out and offering up another $50 billion in share buybacks, as well as raising their dividends. That didn't do them any good in terms of deflecting a look at their numbers. They tried, they failed. So the shares are getting hit at current. I'm going to go to a yearly chart of Apple, Amazon, and Microsoft. You'll be shocked at the RSI on those charts. So we'll talk about those. Let's go to, I'm getting a text that from a couple of buddies of mine, E-minis are breaking support. Let's check that out. Oh yeah, wow, look at this. My buddy is short of the S&P 500 using SPY put options. This 2863 mark, I mean, this is critical support. Let's go to a 4-hour chart. So why this is important, let's update this. Why this is important is because this is a breakout point failure. We broke out here, failed to hold. That was a head fake. Then we had a rally yesterday. Now we have broken down yet again. This is bad. So we really need to hold this lower band of support, or else the next stop is at 2748 on the S&P 500. All right, Eric, I'll look into that for you, pal. Pre-drag, the text issue, the problem is that the text is integrated with the page I enter the trades on, or we enter the trades on, and that plugin, for lack of a better word, is down at current. I have a developer, a new developer, fired my old one, hired a new one. He's in there, and they're cleaning up a big mess, and it should work really good. So it'll be back up. It's costing me an arm and a leg, but it's worth it just to get it steady, consistent. So It'll be back up, guaranteed. I like it myself. No problem, Eric. Denny, yes, please smash the like button. Thanks for joining in, everyone. Will, hey, thanks for joining. Okay. Oh, and I got a note from on one of the live sessions a couple of weeks ago. And for those out there that think that you're watching this on the replay and that I'm not really talking to live people, hit the chat box. You could see the conversation. Because one guy left me, goes, do me a favor, stop pretending that you're speaking to people. It's so phony, but I'm really speaking to people. So I thought it funny. So for those watching this on the replay, please just open up the live chat box and you'll see all the comments that are being put in. Trisha, hello. How are you? So few ladies joined. Kat, I haven't seen in a couple of days. Trisha, another lady, great. A 2 out of, I don't know how many followers we have, but it's growing, but not enough women. Thanks, Will. SQQQ, we are long of the SQQQ. Thanks, Pat. We are short of the Trip Qs using a leveraged ETF. We added yesterday afternoon as the Trip Qs rallied up and into a resistance level we were eyeballing. I wanted to see it hit that resistance level. It came very close. We leaned into the short side. I'll tell you, this time last night, I was not happy watching the futures skyrocket higher on earnings. But when I woke up in the middle of the night last night, checked the future, and I saw that we were leveling off, I knew pretty much it was going to happen. This morning on swing trading, today, I mentioned that the futures were up, but so was the VIX. And I said, beware, somebody's out there buying insurance on this market. I'm not going to be the least bit surprised to see it fade, and it faded before we even opened up. So at current, the SQQQ, this is a 4-hour chart. It is flirting with a breakout here. We're not there yet. Looking good for tomorrow. Let's go to the Qs. They have broken support. So very similar as to what you saw on the S&P 500 is that we broke out and now we have failed. So this is a breakout point failure. In all probability, very strong probability, when this occurs, this failure occurs in such a short time frame, we're going to pull back and retest this lower band of support. However, given the macro changes, and I'm going to go over some headline risks that are out there at current, and the fact that earnings for all intents and purposes ended today. Why? For the first time in about 20 odd years, the key components of the S&P 500, Facebook, Amazon, Netflix, Google, Microsoft, all reported earnings this week. You need to see no other earnings reports other than the banks, and they've already reported, and they were bad. So big tech has announced. They've stated their earnings. Forward-looking guidance is not all that great. It's some companies have pulled guidance. So while the large tech cap names, big cap names, have dodged a bullet for this quarter, the same may not hold true for next quarter, because in the case of Google, they only saw the adverse impact of the CCP virus, that's the Communist Chinese Party virus, impact their business in the second week of March. So for the quarter, they had adverse impact on their business for only 2.5 weeks of the quarter. Now think about it. We're now into the new quarter well over a month. A month now. So what's next quarter going to look like? So I think that you're going to see some of the froth come off of this market. It's been a heck of a rally. I'll be honest with you. We're going to go over a chart of the Trip Qs on a monthly basis in a moment. I'll tell you, being short makes me worried. It's a beautiful, beautiful retracement. Apple, 285. Let's go to Apple. All right, so Apple, off the lows of the session. Qs flirting with the lows. Amazon trying to bounce back here. Jeff Bezos stated that Q2 profits are going to go all towards CCP virus. Microsoft, very interesting, very close to the lows of the session. Very, very interesting after hours price action here. Let's go to some of the headlines as people continue to populate. All right, so hot off the press, late this afternoon, J. Crew preparing for bankruptcy. You knew these were coming. They're coming at a steady flow now, these high-profile bankruptcies. This was a text that was sent to me earlier by Arthur. Arthur, thank you. And it was about the president talking about new sanctions on China. I just pulled up CNBC. I pulled up this article. And this is going to be a problem, a major problem for this market. So if we're looking for catalysts to send this market down lower, this is one of them. Guaranteed. This will be one of them. And the Chinese have been very, very aggressive with fighting back against taking any responsibility whatsoever. So this is going to be very interesting to see how this all plays out, because I think the Chinese are going to ratchet this up a little bit. So we'll keep an eye on these headlines. This is a problem. So what we're dealing with is a market that yesterday morning, for instance, they reported GDP late by 2 minutes, 3 minutes. And in that time space, what did they do? They came out and they said, don't worry about the GDP numbers. Here's new news. Here's new news. Think about Gilead. The trials are going great. The futures skyrocketed higher. Then 2 minutes, 3 minutes after they were supposed to be released, you had the GDP data that was released. Horrible. Worse than expected. But the markets were focused now on Gilead. This is the market that we are trading in now. It is rigged. It's manipulated. So while I could sit on my laurels right now and say, great, Bob, you're short the market. It's looking good going into tomorrow. I got to be honest with you. I have no idea what I'm going to wake up to in terms of headline news out of Washington tomorrow. It makes me nervous. So, and I even mentioned this afternoon, I'm worried about being short the trip Qs because one day when we wake up, guaranteed, when the Federal Reserve decides that it has the legal authority to go buying stocks, what are they going to buy first? The triple Qs. So that'll be my luck. So am I worried? Yes. But I think in the short term, going back to this article here, Gilead says it could produce, you got to read into this. Gilead says it could produce several million rounds of, remember the year, I can't even say it, coronavirus treatment next year. Next year, a couple of million. Right now, they can expect 140,000 rounds by the end of May. So this is not a drug that's coming online. It can get approved really quick, but the production, this is the company telling you, listen, setting expectations here. So I can't see how the market, when they focus on the trials yesterday, don't focus on this today. I fail to see the logic there. But you know what? Logic hasn't worked of late in this market. Let's go to some. Seymour, hello? Adrian, tariffs no bueno. I got to make a T-shirt out of that. Let's go to the weekly charts, and we'll pull up a few monthly charts as well. Now, the yield curve. Let's make sure this is updated. Sometimes there's a lag. The yield curve this month. Excuse me, folks. It closed down. Now, we were overbought relative to the third standard deviation Bollinger Band. Could it be technical in nature, the pullback? Sure. But we were there, very similar price action back in 2007. We leaned into that third standard deviation Bollinger Band for several months. So could it be technical? Sure. Could it be the Federal Reserve? Probably. So you're seeing the steepening of the yield curve, which is bearish for the market. Pull back this month. Do we begin to steepen yet again next month? That's the $600,000 question. So we were down on the month, or we saw not a steepening, a pullback on the yield curve. Now, bonds today should be concerning to some, and it could be a reason why, why we saw a sell-off today. You saw the TLT on a weekly basis. We took out last week's lows. So what you want to do in this environment, because if the bond market is pulling back, what are yields doing? They're moving up higher. So what I want to do now is, and this is the probable reason of as to why you saw gold break down today. Now, we could argue that we closed down below support here. Let's just say we close at it. All right, we'll look for a continuation move lower next Monday. Art, you watch? Not Art. Pat's watching me on a big screen TV. Hi, family, if you're out there watching. That's funny. So you have lower highs on RSI, possible breakdown here on the TLT weekly basis. One trading day left to go, and one day can make a big difference. So let's just say we closed out the day at support. We'll watch and see how we close out the week. Volume this week to the downside, very light. Okay. Now, taking a look at yields on a weekly basis. We're up on the week. We're off the highs of the week. This is the 10-year yield. But we're threatening a higher low here on Stokes. Let's take a look at how we closed out the month. Obviously down. One has to wonder, how much lower can this go? They can't allow the 10-year to go negative. They can't allow it. Nobody's going to want the dollar. I mean, the only thing that's keeping the dollar up right now is the fact that we have we pay a yield on our treasuries. So if they don't pay a yield on treasuries, the dollar is going to tank. And you're definitely going to want to be long with gold. U.S. dollar, speaking of the dollar, this is a monthly chart. So the month is in the books now. Now, we had broken out on the U.S. dollar on RSI, and we closed above it. Price, we broke out last month, the month of March. You saw a flight to safety, safe haven, the U.S. dollar. This month, that trend continued, but much as you saw last month, we sold off the highs of the session. Volatility. Now, I spoke about this earlier this morning. The futures were up when I got up this morning at about 4:30. And while I wasn't happy to see the futures up, I was happy to see that they were pulling back because we're short. And the VIX was up. So that's a tell. So I knew something was afoot. So the VIX this week is poised to close down, but well off the lows. Daily chart. Now, a very nice rally today. We close off the highs of the session. Update this. So we're still trending down here. Obviously, the price action after hours, if it follows through to tomorrow, you're going to see the VIX spike up higher. The number to watch on the VIX is a spike up and a close above 3750 on the VIX. In fact, let's go to Microsoft is really giving up its gains now. Let's go to... All right, so the VIX price action, I don't even think this is open right now. I don't think this is trading. All right, so yeah, we're moving up higher here. So 37.50. 35.65. Where do we close? Yeah, we're moving up slightly. Not much, though. Let's go to... Now, the transports. Very interesting chart. And I was shocked, frankly, to see the transports close above the 8,000 mark this week. But they did. The problem is that they sold off. All right, so they couldn't hold those gains. We're still up on the week. What was support back here is now resistance. Back here was support. We found the bottom December of 2018. That acted as resistance this week. Big volume. Let's see how we closed out the month. So a beautiful reversal bar here. I mean, very nice. On big volume. Huge. But here's the problem. And I'm frankly surprised that we closed as high to the highs of the month as we did. Because when you have your stochastics declining and trading down below 50, and note how we made a new monthly low this month, rallies tend to fade, right? And we saw a fade, but not all that much, to be honest with you. The Dow Jones Industrial Average weekly chart. Still trading above 24,000 handsomely. Volume so far this week is pretty good. Beautiful reversal bar. So again, while I'm short, I look at these charts on a monthly basis and I'm saying to myself, you know, it's fairly good price action. So, you know, when you get candlesticks like this, you know, forget about the economic environment that we find ourselves in. If you put that aside, and I know it's difficult, but for the purposes of looking at a chart, you look at a chart like this, and you assume that you're in a normal trading environment, you would expect to see a continuation move higher in the following month. So while I would love to say that I'm expecting a crash tomorrow, next month, I look at the chart and I have to temper my comments a little bit. You know, while we could certainly pull back, maybe have an inside month, we can't rule out the possibility of there being a potential new higher high versus April. So we want to keep an open mind. We don't want to get married to our hypothesis. So my hypothesis is that I believe that we're going to at least have a retracement of this rally, if not a retest, if not a break of the lows. That retest and the break of the lows, given the way that we closed out the month so far, is probably going to take longer than I initially anticipated. Because, again, we closed out the month very strong, despite today's price action and the after-hours action. Weekly chart S&P 500, up over 2.5%. Now, one chart that we spoke about last week was the S&P 500. We were looking for consistencies, consistent resistance levels from prior bubbles. And one that we found, was the 20-period moving average. As noted here, in green dotted line. So going back to 2001, we had the counter trend rally from the dot-com bust. We stalled, we rolled over. Fast forward, May 2008, counter trend rally peaked right at that 20-period moving average. Fast forward to present day. Where do we close out the month? That moving average is at 2,891.25. We closed above it, not by a large margin, but we closed above it at 2912.43. I agree, Pat. NY Jets, Bob Yang Pop today is a time to get in. It could be. I'll wait to see how we close out the week before we make that move. And we'll take a look at the 4-hour charts, because I want to see a breakout in the 4-hour chart. I want to see a pullback and a retest, a higher low, because I'm tired of these head fake breakouts. We've seen it with the SQQQ. We've seen it with Yang. So let's make sure that we have a bottom in before we go adding more to that trade. But given the headlines that are coming out and have been coming out about China, their aggressiveness, whether it be towards the Europeans or towards Iran now, their trade has dropped with Iran to a 20-year low, or towards the United States, and Taiwan. And now that we're responding with rhetoric, you could see a ratcheting up of tensions, and you'll watch the Shanghai Composite Index. And if we do really begin to break down here in earnest in the United States, traditionally the Shanghai Composite and the United States stock markets trade in tandem. So if we're going down, in all probability, the Chinese markets are going down as well. Same chart. The banks, a strong week. They've given up a lot of the gains on the week. Now, I mentioned last week that I was looking to build a position on the trip Qs to the short side, and we're doing that. We're executing. I expected a rotation of money as we proceeded into earnings, into the banks and into the small caps. We traded the small caps because it happened. Money rotated into the small caps. We'll go to that chart in a moment, and into the banks. But it looks as though that rally is somewhat short-lived. Assuming that we close out the week where we're at or worse on the banks. So let's update the chart. Because what we're seeing here are topping tails. The market is telling you that the buyers are back here, or those that wish they had sold this wipeout know that there's resistance above, sellers above looking to get made whole. They want their money back, and they're selling. Stokes appear poised to roll over. Let's see whether or not we close out the week with a breakout on RSI. At current, no breakout at all. And what I want to do is create a reminder here. Keep an eye on these Stokes. Do they roll over as they did back here, back here, back here? And that'll put a nail in the coffin of a V-shaped recovery. You got to have your banks rallying. Let's go to the... Could have sworn I had them up here. Yep, here they are. The small caps. All right, so here was the rally in the small caps. We got the breakout last week. We bought the breakout. We went to, it was on a daily chart. Here, this breakout here. I didn't enjoy the entire rally up. And we broke out yesterday. Breakout point failure today. We're probably coming back down here to 127 per share. It's not a broken rally, but it's one that's certainly under a lot of pressure. Today's selling was on volume. Let's take a quick peek at technology. We're short of technology using another separate leveraged ETF. It's more of a pure play short of technology. On the week, it's technology. The XLK is up over 3%. Light volume, very light volume. Let's see how we close out the day. All right, so this is what you're starting to see. It's across the board as well. You know, I could bring up the trip cues. I'll bring up the trip cues and show you. We're seeing this. Lower highs on your Stokes. My guess is, and I don't know this for a fact, but this is probably, yeah, this is resistance. You can see here, let's update this. You can see back here, after we broke through it, they rallied it back on March the 5th. Rallied it back, it acted as resistance. We're there yet again. So it's a reasonable point where we would find a lot of sellers selling this rally. Especially now that for the most part, technology is reported. The news is out. We may get a sell on the news event. Today we had an inside day, no new high. Semis, a down week on the semis. Actually, no, I'm sorry. They're off the lows of the week. I saw the red here and I thought down. They're up just barely, though, on the week. NVIDIA took it on the chin today. Biotechs were very strong. Bearish key reversal week. Very bad week. I mean, wow. Wow. See how that 20-period moving average, which is declining, it's acting as the declining ceiling on the biotechs, and they were on fire. And the big boys sold momentum. Crushed. Here's that lower high on Stokes. Let's bring up the trip cues. Now, here's the chart that scares me. That's a pretty chart. I mean, this is in the books. April's in the books. This is not going to change tomorrow. That's a pretty chart. So, while it's great to see that the trade is going in our favor in the after-hours session, I have to keep a look at the higher level view, right? Because we trade using multi-time frame analysis. So I had hoped that we would at least pull back and close back down below the 215 mark, ideally even better, the 210 mark, weekly chart. But it didn't happen. Now the weekly view, not a bad week so far, up over 2.33% on the week. Stokes are above 50, powerful. So again, I'm not going to come on here and speak my book. What worries me is that this is still a powerful chart. Daily chart. And as I pointed out on the XLK, here's what we're looking at. A probable lower high on Stokes. We broke down a while ago, and this is what's really kept me laser beam focused on the trip cues. RSI broke down on April the 21st below this support level. And ever since, it's been limping back up. So the rally, I've kind of eyeballed it as being very, very questionable. I mean, we broke out here on, actually it was here, on the 24th, continuation move higher, then the next day, breakout point failure. What happens then? They gap it up higher because of the Gilead news. So they forget about the worse than expected GDP numbers. The economy's cratering to focus on a headline out of Gilead, and they're not going to have any. They're not going to have a significant amount of this vaccine to go around until next year. So will the bears focus in on this? I don't know. We'll see. They should. Down volume today was not bad on the Trip Qs. But there was a tug of war all day long between negative and positive. Energy, weekly chart. Not a bad week, especially given the price action of oil, which has come off the lows. But I still wouldn't buy energy, not yet. Oil is looking very interesting. Possible bullish key reversal on the week. Emerging markets. Very worried about emerging markets. I think we may have topped out here. If you're thinking about buying any of these individual ETFs, be careful. A lot of them are overly weighted to China. And if you're a bear on China, be careful of what ETFs you're buying. The EDC, which is a leveraged ETF, is 20% China. So just be careful of the ETF you're buying. If you're bearish on China, fine. So am I. Don't go buying an ETF like the EDC. And me personally, I like Vietnam. We're watching this very, very closely. Beautiful rally here. I want to see a pullback. They will be a beneficiary of the exodus out of China. Gold. Now this one here is a real tell. So I've been talking about longer term, I expect, I don't know about hyperinflation. I'm not going to get all hyperbolic like that. But inflation. We're already seeing it at the food level. And in fact, I'm going to share with you my favorite chart of the week in a moment. So stick around. That's a tease to keep you watching more on YouTube. Helps me with the YouTube algorithm, along with smashing that like button. So please, smash the like button. So gold this week, a very bearish week, assuming that we close where we close today or worse. I wouldn't go as far as to say this is an outside reversal week because we didn't take out the highs of last week, nor have we taken out entirely the lows. But we are engulfing where we opened and where we closed last week. So many would say, you know what, that's good enough. Me, not really. So RSI is putting in lower highs, and everybody knows I'm a gold bull. But I've been warning about a potential weakness in gold, and now we're starting to see it. And this is a sign of deflation. And the bond market is signaling, you look at this lower high here. This is very choppy price action, not good. The bond market is signaling, if you go to the tips, Treasury inflation protected securities, weekly chart, one trading day left to go, but so far this week, you have a bearish key reversal. So this is not a signal that bond buyers are worried about inflation. If they were, they'd be buying the tips, not selling them. So short term here, until we get this economy at least unlocked completely, and we can pack a stadium or two, I'm concerned about deflation. And it's been a concern. Now it's becoming more of a longer term concern. And we'll bring up the gold mining sector. Clubbed today. I mean, this is a head fake all day long. And if you're wondering what I mean, you had a bullish reversal bar yesterday. Right after Jay Powell spoke, you saw gold rocket, silver rocket. I want to bring up a chart of silver as well. Now, what we've done today is we engulfed yesterday's price action and broke down below support. So the miners are under a lot of pressure. Let's bring up silver. No bueno, man. So silver yesterday, it appears as though it had broken out. And what did it do today? It reversed. Let's update this. And I'll tell you what show you what I mean. All right, so yesterday we broke out. And today, again, another head fake. We just barely held on to support here. Now, what worries me, where I long of silver, we booked profits on silver a couple of weeks ago. Take note of the lower highs. We're breaking down here. Volume rose to the downside today. Let's go to a higher level view. We'll take a look at a weekly chart. For that matter, a monthly chart. See how we closed out the month. Yeah, well off the highs of the month. All right, so I think that silver is going to come in, gold's going to come in, miners are going to come in. I think that this is probably going to be the last chance, that last bite of the apple to really begin to build. If you've been ignoring the silver calls and the gold calls, this is probably going to be the last bite at the apple to get on these names before inflation really starts to rear its ugly head. Let's take some chart requests. I have a few I need to go over. And I have to log off exactly at 7 o'clock tonight, so I'm going to go with members' requests first, and then anybody who uses that, I don't know what it is. What's it called? Super chat or super stick or whatever they call it. All right, let's bring up GLOG. This is for Pat. Beautiful inside week, a month, I should say, month. Screwed that up. And we have broken out. Stokes are hooking up. Weekly chart. All right, so it's a good looking chart. The only negative I would say is this, is that we didn't put in a new weekly high yet, and we're off the lows off the highs of the week. But the Stokes are hooking up. Here's your higher low. They're breaking out now. Nice. RSI's clearly putting in higher highs now. And you don't have a ton of volume between here and $14 per share. So I think there's probably some significant upside here if and when we close above 5.61. Daily chart. You have resistance immediately above. We already knew that. We had a down day, but we closed well off the lows of the day. I would keep it simple. Right now we're in a triangle formation. What do we want to do here? Breakthrough. Keep this active for a few days. And there you go. And another alert. GLOG. Okay, so again, 5 days. Trigger twice is fine. We're good. Let's just overlay this with some. So this is another price point. 428 is good weekly support on GLOG. Pat, I'm dropping it in the box for you. The other one, GLOP. Weekly view. Monthly view. I keep doing that. Very nice. Very nice. Weekly chart. All right, so you're declining. What is this? A 50 period moving average or 20 period? This is a 20 period moving average. So you're declining 20 period moving average. This is the reason why you're seeing resistance right now, Pat. This is acting as an overhead ceiling. Certainly it can be overcome. You just need it to flatten out. Daily chart. Thanks, Oliver. All right, no weekly resistance in the neighborhood, so take that off. I like the chart, Pat. You know, I wouldn't buy it here. I wouldn't sell it. I would just hold on to it. You know, right here where you see this big volume spike out, you see how we bounced off of that price point? That's a good sign. You have defenders of the support level below. You know, if we do break down below it, you may want to consider stopping out on a new daily low or close below. Let's call it, what's the high here? The high was 506. We break down below that mark, you may want to consider booking some profits. But right now, it looks like it's trying to hold support. Okay, there you go. Boom. There's Pat taken care of. TA, you like that? The T's reference? I'm going to go over that chart in a moment. Oliver. Fed algos roll over. Bear country short term. AYTU. I knew you had a symbol. AYTU. All right, so the chart that I teased earlier was the DBA. And the reason why I brought it up today is because I went to the supermarket today and You know, this is going to sound contradictory because I just talked about deflation earlier, but you have deflation in an economy, but you can have pockets of inflation, right? So I went into the supermarket. First off, I go over to the food aisle, the meat aisle. There's hardly no meat. I thought I was in Soviet Russia back during the 80s. You know, you ever see the pictures of their food aisles? There was nothing there. I'm looking at the meat section. There's no meat. Little pockets of meat. That's it. And the prices, my God, through the roof. Then I'm in the produce section. Prices through the roof. So I came home and I said, let me take a look at the DBA. Now, the DBA is the agriculture ETF. And I check it probably once a week. And I already checked it this week and it was down. So I brought it up again today. What were we doing? Ripping. Bullish key reversal bar on the week. Now, we sold this thing up at 19. That was a long time ago. Back up here. So there's our support. I'm looking for a breakout. And I think it's going to happen pretty soon. So this is one of the reasons why I like using very high level view charts, multi-time frame analysis. You take a look at the charts from the weekly view, monthly view. Let everybody else pay attention to the 10-minute, 15-minute chart. I don't care about that stuff. I am not a day trader. Never professed to be one. And if you take a look on a monthly chart, we bounced with the third standard deviations. Bollinger Band, in and of itself, not a reason to buy. So not a great month. It was a down month, almost 2.75%. But on the week, I got to tell you, it's looking pretty good. Daily chart. Look at this rip today. Up over 2.33%. We've broken out, or beginning to break out on Stokes. Beautiful, beautiful RSI. I mean, textbook. Perfect. Higher lows and a breakout. Cup, handle, breakout. So the DBA is definitely on our watch list. Going back to some requests. I have 7 minutes. AYTU. All right, biosciences. Makes me a little bit nervous because the sector caught it on the chin this week. But we'll keep an open mind. All right. Pays to keep an open mind. A very nice chart. We broke out last month. You know, when you have a long-term downtrend like this, what I like to see is a retest of the breakout point. But man, I mean, that's a pretty far way down in terms of percentage terms. So we may not get that. We're holding the 20-period moving average at current, or we closed above it. And we didn't even do that last month. We closed right at it. Weekly chart. Very nice. We broke out this week. Very nice. Higher lows. We're off the highs of the week, but that's okay. Daily chart. What I think may happen here, given the pullback and today's price action, note the volume at that price level. So you have at, what was the high? We'll just use the high of the day. About $1.84. You have a lot of sellers up there. And it makes sense because you have all this topping action from back here. What I would like to see on this stock is a pullback and a retest of the breakout point. And it's probably going to happen. Especially given the condition of the biotechs. I mean, they really got nailed today in particular. But this stock showed relative strength. Okay, so the alert's set. That's how I would play this. If I were long, I'd stay long. Unless you're short-term swing trading it, then I'd book profits and buy back in at support. Put a stop loss right down below the day's lows. Let the market take you out. And then buy back in down here on a consolidation. I dropped a chart into chat for you, Oliver. Let's see. AMD. Joseph, hello, Bob. DBA to break up? Break up or out? Joseph, in a few days. If it's, I think you mean break out. Probably, yeah, I think so. Oh, okay, so this is a coronavirus play? Gotcha, Oliver. Thanks for that. You really need to do your due diligence with these names, though, because I got burnt on one. Let's see. AMD. I knew I was trying to type up something. AMD, it's sad to see. This was such a good-looking chart, and now it's rolling over. So I went over this chart, I guess a week or so ago, and I warned about the topping action. And sure enough, you saw it again this month. You know, the RSI is still rising. It looks good. The problem is that you have your Stokes on a monthly basis. You're welcome, Will. Your Stokes on a monthly basis, you possibly forming a head and shoulders setup. Left shoulder, head, right shoulder forming. I'm not saying it's going to break. Many times they just get negated, and that happens. But just be aware of that. You're starting to see some weakness here. Weekly chart. Yeah. Lower highs. So you had a little bit of a divergence here on RSI. We were rolling over last week as we were higher on the week, and that's probably because we came off the highs of the week. Daily chart. Yeah, and this is what is really concerning. We broke support today. You know, there is another support level right where we closed. From back here on the 21st. But I would have to say I would need to avoid these shares if we make a new daily low. Just be careful. I want to take a look at the candlesticks, raindrop style. So you had a considerable amount of selling pressure into the close. Not a lot, but not what you want to see. Stokes are rolled over here, lower highs, lower lows. So I'll be very careful. Danny, you have a great night as well. Folks, please, if you could smash that like button, I'd really appreciate it. Subscribe to the channel. And thank you for being here tonight. And tomorrow, I won't be doing swing trading today, but I will be doing Sunday night stock charts live. So please join us on Sunday night. We'll watch and see how the futures action opens up. 6 p.m. Eastern Standard Time. Everybody have a great night. I'll talk to you tomorrow.